Every day, there is a growing amount of desire for Tesla to buy back part of its shares. Many individuals like Tesla for its goods and business approach, but others think that given the recent decline in the firm's stock price, the company will need to take more steps to preserve its financial standing, particularly for Tesla stockholders. There is no doubt that many more investors may be forced to sell off their shares if the stock price of the firm continues on its current track, even though other Tesla supporters may not be as concerned about it. Welcome back to Everything Tesla Stock, everyone. Even if Tesla hasn't taken any action on its share repurchase, it is clear that the business is aware of what its investors demand. A number of analysts have expressed their thoughts regarding the potential impact of Tesla's share repurchase on the company's stock price during the past few years. But longtime Tesla bull Gary Black went a step further and wrote an open letter to Tesla's management outlining all the positive effects this may have on the company and its shares. Black claims that Tesla is well positioned to generate massive profits from its share buyback program and to offer investors extremely high values. For what reason does Gary Black believe Tesla should repurchase some of its stock from the open market? To find out, keep watching. To stay up to date on everything Tesla is doing, remember to like, subscribe, and enable notifications before we get started. This was revealed by Future Fund co-founder and managing partner Gary Black in an open letter to Tesla's board of directors. Black has been a longtime supporter of Tesla and has often expressed his optimism about the company and its shares. The most significant holding in his company's stock portfolio, which includes the flagship Future Fund ETF, a high-conviction ETF registered on the New York Stock Exchange, belongs to the Tesla bull, with an investment-grade credit rating now in place and Tesla stock trading at its lowest forward PE ratio since the epidemic. Black said the firm might contemplate an ambitious multi-year stock repurchase of at least $10 billion. He went on to say that he would rather Tesla maintain its debt capacity and that any future buybacks come from surplus cash. Black thinks that by doing this, Tesla will be able to generate profits and raise the price of its shares. Companies like Apple and Google have profited from stock buybacks. Perhaps Tesla can achieve similar profitability. Black claims that a repurchase of stock will provide Tesla's management great latitude in terms of turning on and off an optimistic outlook, particularly during periods like now when short-term noise is causing shares to decline. Without a question, Tesla stock has declined over the last few weeks. Most recently, the price of the stock dropped by over 50%, signaling a turning point for the company. Since 2019, Tesla has generated enormous profits for investors. The firm even momentarily reached the trillion-dollar mark as it expanded its manufacturing to keep up with the high demand for its electric vehicles. Even in 2022, the automaker managed to meet customer requests in spite of challenging market conditions. During these years, it also saw an exponential surge in earnings. But for the last 2 weeks, the company's stock has not been doing so well. The automaker's stock finished at a price below half of its closing high on November 4, 2021, which made some investors question if it was time to look more closely at the firm at this time. Investors are experiencing panic as a result of the stock's ongoing decline in value. Some are beginning to sell their shares out of concern that it may fall in the future. A thriving public business like Tesla wants to maximize returns for its investors, and those like Gary Black think that if the company does buy back its shares, it will do so in a way that will improve the value of those shares. Black cited Tesla's current financial situation in saying that it might be a good time for the company to buy its stock because of its $18.9 billion in cash and marketable securities, almost no debt as of its most recent 10Q filing, and Future Fund's expectations of up to $20 billion in free cash flow in 2023. Writing at the closing price of $221.72 on October 13, 2022, he stated, "We calculate an annualized internal rate of return of 24%, well above Tesla's after-tax return on cash or new debt. Assuming 2023 non-GAAP earnings of $8 and a 30 times PE, purchasing back Tesla shares gives a 3.6% earnings yield, which is better than Tesla's first-year after-tax return on capital, even assuming our 2023 non-GAAP earnings of $8. Gary Black thinks that buybacks still have beneficial long-term capital gains tax treatment when contrasted to Tesla's dividend payments to shareholders. They are manageable. Leo Kogwin, a Tesla investor and chairman of SJI International, is likewise in favor of Tesla repurchasing its shares during periods when the company's stock price declines significantly. A shareholder in Tesla had already demanded that the firm declare a $15 billion stock repurchase during a decline in the share price in May. According to Kogwin, Tesla ought to make public its intentions to repurchase $5 billion of its stock this year and $10 billion the following year. He said the carmaker could finance the repurchase with its free cash flow. Kogwin said in a tweet at the beginning of October that the only ways to reverse Tesla's falling P/E ratio are through a buyback and double-digit earnings growth. After a while, Musk responded, raising the prospect that Tesla will set aside money for its first-ever share repurchase. But what does this signify for its investors? To find out, keep watching. Please remember to like and subscribe if you haven't already. The repurchase of Tesla stock has the potential to boost its value and provide funds for Musk's acquisition of Twitter. Given that Musk has until October 28 to fulfill his $44 billion agreement with the social media giant, now might be the ideal time to purchase some shares. It's unclear how many Tesla shares Musk will sell, though, if he needs to raise money for this acquisition. Furthermore, not all analysts now favor a share buyback. It can be dangerous for Tesla to use its capital reserve or issue debt to finance a share buyback because the company is capital intensive. In the event that the business needs funding for this project in the future, it will have to take on debt, which will put the automobile manufacturer in a more precarious situation and impair its financial standing. For a company like Tesla, a share repurchase is a dangerous move, even though it might be wise for other businesses. Since they are already susceptible to shifting market conditions, some analysts think that rather than concentrating on Tesla's stock value, what matters most is the company's execution in producing goods that consumers want and investing in new markets and products that will accelerate the growth of the business in the future. Others believe that repurchasing stock prevents a company from expanding. However, Gary Black disputes this idea, pointing out that repurchases of stock occur only when funding for all internal operations projects has been secured. Gary claims that investing in debt repayment, purchases, dividends, or cash accumulation won't yield returns on capital close to what one would receive from purchasing Tesla stock. He went on to say that businesses like Apple, Google, and Microsoft have all used this repurchase strategy consistently for years with good outcomes. If Tesla decides to buy back its shares, there are a number of good reasons to support the decision, one of which is that it makes sense to purchase the company's own stock because outside variables, particularly those outside of Tesla's control, are what drive down the share price. The Tesla bull, Gary Black, wrote an open letter estimating that, after all operating investments, Tesla will generate $10 billion in free cash flow over the next 3 years. He also noted that, in addition to having virtually no effect on financial flexibility, such a buyback would send a strong signal that the board takes its responsibility to maximize shareholder value very seriously. Tesla is steadily approaching its target of a 50% annual volume growth. Therefore, the fact that its stock is trading at all-time lows surely doesn't indicate that the automaker is in excellent financial standing. Additionally, Tesla has a sizable community of retail investors who, should the company choose to pursue a share buyback, stand to gain significantly from the rising value of its stock. How do you feel about Tesla? Do you believe that raising the price of Tesla's shares is the wisest course of action? Please share your thoughts with us below, and don't forget to rate Tesla. To find out what Tesla has been up to these past few days, click the following video that appears on your screen. I'll see you over there. Music.